Hey, this is Chris from StockSpot, Australia's largest online investment advisor. Now, over the last year, over 100,000 new people have entered the market as first-time investors. And in this video, I'm going to share the 5 things I think you need to be thinking about in order to get the best results with your portfolio. And these are all things we consider very carefully when it comes to building portfolios for our clients at StockSpot. And the first one is asset allocation. Really getting the right mix of assets in your portfolios, shares, bonds, gold, and other assets like those, in the right percentages for your risk tolerance, your time horizon, your capacity to take risk, and also your ability to weather drawdowns and market falls is the most critical thing you need to do. If you can get this right, you're a long way already to having a successful investing outcome. The next one is actually picking the underlying securities in your portfolio. So once you've worked out your asset allocation, which ETFs are you going to use? Are you going to pick managed funds? Are you going to pick listed investment companies, or are you going to pick individual shares? This really comes down to your own personal preferences, although there is a lot of evidence in our view that suggests that low-cost index funds for most people are the right way to go. But picking those underlying securities is the next most important thing. The next one after that is deciding, are you going to dollar cost average or gradually drip feed money into the market over a period of, let's say, 6 to 12 months is what we recommend to clients, or put everything in all at once. In the comment section below, I'll share some links to blogs we've written that compare the pros and cons of dollar cost averaging versus buying as a lump sum. The fourth thing you need to consider is administration and tax. So owning a few investments, particularly if you have some direct shares and ETFs and managed funds, is quite a hassle when it comes to tax time. There's a lot of aggregation and reconciling between the different products, making sure you've calculated your capital gains and all of the component tax correctly. You've got to decide, is this something you're going to do yourself? Are you going to use software to do it, or are you going to hire an advisor or an accountant to assist you with that? And I think making sure you've considered this in advance of your investing is an important consideration. And then finally, the fifth consideration is really, should you be investing yourself or outsourcing? And this is really a decision that's going to combine all of those other considerations. Do you have the time? Do you have the headspace? Do you have the capacity to make these decisions yourself? Or do you want to outsource to a traditional financial advisor or to a robo-advisor like StockSpot to manage this all for you? I think those are the 5 things you need to get right when it comes to deciding how you're going to invest your money. And I think for first-time investors in Australia, I'd be focusing on those 5 things first.